Okay, so back with candlesticks, and as I suggested in the previous video, candlesticks and bars, there's a handful of them that traders will pay attention to. Quite frankly, there's only a couple that I actually look at as signals themselves. So one of the main reasons I think you can't get too hung up on the shape of a candlestick is that quite frankly, there's different time zones around the world. Brokers use different time zones to plot their charts. So, for example, this is a daily chart of copper, and with this particular broker, it could be GMT -5, which is New York City, or it could be GMT. That's a 5-hour difference. So the daily candle is going to look quite a bit different. Now, when I first started, that was a big problem for me, and I think a lot of newer traders, that they get concerned about the shape of the candle because what's the correct time zone to trade out of? You know, where do most of this is the phrase you'll hear time and time again, where do most of the big boys trade out of? The best piece of advice I ever heard was trade the charts in front of you. It just simplifies everything. And besides, you have to think about a candlestick just represents what happened over a set amount of time. The time itself doesn't matter. It's the price actions that matter. Time is a man-made concept in the sense that it is used to divide up actions or to have us go to the same place simultaneously, for example, if you're trying to meet somebody. But really, time itself is irrelevant. Once you make that distinction, then you can start to look at candlesticks in a different way. So one way that I would look at candlesticks, I look for significant candlesticks that I think catch a lot of attention, and also that tells a story. So, for example, I'm pointing out shooting stars. Now, shooting stars, if you think about it, these candlesticks here, and here, what are they telling us? What did it look like on the day on a line chart? So instead of a daily chart here in copper, let's just say it was a line chart, a 15-minute chart. Well, what does that day look like? Well, that day starts out a little bit lower than the close. It rallies, it falls, and bounces a little bit. Well, that's a pretty volatile session. And what do you take as the story here? Well, the story here is we pushed significantly higher during the day, but could not keep those gains. That's a very negative sign. And you can see quite often that is a harbinger of bad things to come. So, for example, over here, we started at this price. We try to rally. We fall significantly. We end up here. Very similar shape. That tells you that the buyers could not hang on to gains. So once this candle gets broken to the downside, what does that tell you? This is where the psychology of the candlestick comes in. You have to think, you always have to ask yourself, what would I do in this situation? If you are a buyer of copper here, and you see this market going against you, and it is now below the lows of that day, well, you are losing money. You have to think that maybe you got in here and at this price, and you're a little bit down at the end of the day, and that's not good, but it's not the end of the world. Well, the next day comes out and we start to sell off. Well, if you got in here, you're losing your money rapidly. Eventually, the buyer has to sell to reverse the position, and it just feeds upon itself. Remember, charts are just simply a measurement of psychology in the market. In this particular case, here and here and here and even here and here, you have seen the markets exhaust themselves trying to go to the upside. Now, there are considerations with placement, meaning that if a candlestick, a shooting star, is at the top of an upward movement, the trend's been going up, and then you see something like that, well, that means that we could be exhausting ourselves and due for a pullback or a correction or a trend change. Either way, it's a reversal candlestick. And you'll find that most candlesticks are reversal candlesticks, one way or another. Now, I approach this a little differently because I don't think that necessarily has to be the case. I mean, when I look at this chart, I can make an argument for consolidation here. So this candlestick suggests that the buyers couldn't break out or at least couldn't hang on to the gains. Fair enough. This could be the same thing. It was a downtrend. We bounced and we continued the downtrend. Fair enough. But they also mean things in much tighter areas, like here. Not a massive move lower, but certainly a grind lower could have worked. So keep in mind, all it means is that the buyers could not hang on to the gains. And that's really what you need to know. And as the market goes lower, it creates a snowball effect. Now on this chart, there is also something called a hammer. It's the exact opposite. And you can see, for example, this candlestick, we fell. What happened? It's very much like the shooting star. We started at this price. We tried to rally. We fell significantly and then turned around to close like this. That is essentially this candlestick. So much like the buyers, the sellers can't hang on to the losses or pushing the price down. And as the market goes higher the next day, if you started selling here, you're really starting to lose money. You eventually have to buy and reverse this market. And we went much higher over the next couple of days. Now, I would say this immediately. These are the two most common candlesticks that people get excited about. You either hear shooting stars and hammers. Shooting star at the top, hammer at the bottom. The reason for the name hammer is this is the handle, and that's the actual hammer itself, the body, the mallet, if you will. Sometimes you hear them called pin bars, interchangeably, both positive and negative on the bar charts. That's because this is supposed to be Pinocchio's long nose. He's lying to you. I really don't care what you call him. What I want you to know is that it shows exhaustion. Exhaustion's a very strong signal. Now, invariably what happens when I'm on the forums or I give some type of analysis and I say, we've got a hammer here that formed, should be a bullish sign, but then the market falls right through it, keeps going lower, because that happens. And the answer to that is nothing's 100%. So you need to get that out of your head now, but by playing the odds, by understanding the psychology of the market, you will win more than you lose, assuming that you trade with a level head. So shooting stars and hammers are very powerful signals. That is especially true if they are at support and resistance, which hopefully you've seen that video. If not, go back to it and pay attention. If you get a certain amount of support, for example, in this chart, I can see that there is a certain amount of support there. Obviously, price was having trouble breaking below, I want to say maybe 253 or so. So these hammers show that the sellers kept pushing and pushing and pushing and couldn't keep the market down. Well, that makes this hammer an even more interesting candlestick. But having said that, you can see that this hammer here, we actually fell below the bottom of it. So it doesn't mean that it works all the time. But it does give you an idea as to how the psychology of the market may be operating. Now on this next chart, this is Alibaba. And this is the CFD for the stock. And really, at this point, the only one that I'm looking at on this chart is that candle and the following candle. And the reason is because the first one is so impulsive. Well, what does that mean? That means obviously a lot of buying pressure came to fruition. My advice, my personal advice is if you see a candlestick like this, there are two things that come to mind immediately. Number one, it is an impulsive move higher. And impulsivity in the market means that something has changed or suddenly people will all agree on one thing that moves the, in this case, price higher. You'll see large red candles as well. Those are impulsive negative candles. I think that's pretty obvious. Unfortunately, what I see out there when I talk to traders is a lot of them go, well, that was ridiculous and I'm going to start shorting. No, 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 no. The market's right, you aren't. Even if the market's wrong, you should keep that in mind. The second candle is one of those shooting stars. Now, when I look at this, I see an impulsive candle, a ridiculously strong impulsive candle, and then a shooting star. I don't think, hey, I have to start selling. I think, hey, we're going to get a pullback. What's that mean? That means we're going to get, in this case, value. We're going to be able to buy at lower prices. You can see that the hammer formed and we've got higher cents. So keep that in mind. These impulsive candles, get out of the way. Also, don't buy at the very top of one. Don't let a big candle like this form and then buy. Because even if it keeps going higher, you got lucky at best. You are 9 times out of 10 going to see a little bit of a pullback that offers better pricing. So keep that in mind. That's a very important thing to remember. If you see a chart like this and you've missed this candle, you just think, okay, I want to buy Alibaba on a pullback. It'll save you a lot of headaches down the road. In this particular chart, I'm going to be looking at gaps. This is coffee weekly. And you can see that coffee is a little less liquid, and you'll see this from time to time. You see this more in futures and stocks. You almost never, you can see it on weekly charts in Forex, but the 24-hour nature of the market makes a gap beyond the Monday open almost impossible. So coffee with these gaps. A lot of times these gaps form like this, and that's a huge gap. Monday came out, and we opened here and we fell. We came back and we continued to fall. A lot of times these gaps could be thought of as an impulsive candle. All you have there is a severe lack of buyers. In the futures markets, they match up trades. So that means that when we opened that week, a buyer that a seller could get an order filled was all the way down here. And that moved lower. That shows impulsivity. That means we should, in theory, go lower. And the deeper the move, the wider the gap, as you were, the more important it is. And as you can see, several times on the weekly chart, we gapped down. Again, this is less a Forex thing and more a stock market and futures thing. You can see that it does work in both ways. We got a little bit of a gap there and shot higher. Needless to say, coffee is a very volatile market. It's a very difficult one. This is an extreme example, but it gives you an idea. If we gap higher, well, that means that there weren't sellers until much higher prices, meaning that markets are going to go higher because there's huge demand. And of course, in this case, vice versa. There is very low participation from the buyers. The sellers are having to dig deeper and deeper and deeper to get their orders filled. That's a very bearish sign. And finally on this chart, I'm going to take a look at engulfing candles. And an engulfing candle is simply a candle that completely engulfs the candle from the previous day, week, hour, whatever you're looking at. In this particular case, we're looking at the Swiss SMI index. This is a daily chart, and you can see this candle right here. The first thing is obviously it's very bullish, but it completely engulfs the previous candle. So think about what that means. When we started this 2-day sequence here, markets really didn't do much. That's basically what this candlestick looked like. The next day, we opened up all the way down here. That is an extraordinarily negative gap. What's truly impressive is we shot right through this gap and went much higher. That means there was an intense shift in the psychology of this market. This engulfing candlestick shows that traders suddenly thought highly of the Swiss index. And you can see that we did pull back. Like I said, these impulsive moves, most of the time, will get a pullback. You had an opportunity to buy this hammer here, either one. And then the market has taken off since. You can see that for a couple of months, it's been a straight shot higher. And that right there was your turnaround in the marketplace. I love engulfing candles like this. especially when it's counter trend, because for me, that screams that the market is changing its attitude. And that is something that you need to pay attention to. That can get you in on the ground floor, if you will, or at least close to it. And you can really maximize the profits. And I even see another engulfing candle here. It's not as explosive, but it's not as big of a candle. You can see this day here was followed by an engulfing candle. It completely engulfed the range and more for the next day. So again, think about it. We gapped higher at the open and then wiped all of that out. We eventually went lower. These engulfing candles mean something, and especially when they're that big. When you see a candle that big, that means that the market's going to continue to go in that direction most of the time, especially if it's a liquid market, meaning that there are a lot of people trading it. So I hope I gave you something to think about. I would not get too hung up on the shape of candlesticks. Engulfing candlesticks, shooting stars, hammers, that's most of what I trade. There are literally hundreds of candlesticks and names for them and everything else that you can get involved in. And I will go through some charts in this next set of videos, show you how I look at them. I'm going to marry the support and resistance and the candlesticks. I'm going to walk through several markets. I may even make a couple of different videos showing how to put this together to give you an idea of where to go next when you see a chart, or at least the setup or the mindset that you should be looking at. Sometimes you get what looks to be a really good setup, but it fails. And sometimes that in and of itself can be a signal as well. Because remember, for example, this very, very bullish candle, if we break down below the bottom of it, that's a failure of a very impulsive, bullish engulfing candle. If that fails, what do you think happens next? Those people all are wiped out. They start selling. That's a complete panic move in both directions. There are a lot of different ways to look at that, and I'm going to go through that. And now that I think of it, I'm going to make a couple of videos because this is that important. This is basic stuff, but this will save you years of frustration if you learn it.